So price absolutely is the foundation of all of my systems. So the vast majority of the systems make most of the decisions based on what price movements are doing. Volume can be helpful. You absolutely need volume for your liquidity filters to determine whether or not that instrument is liquid enough to trade. There are some situations where volume can be useful as a rule. However, in testing, you will find that it's nowhere near as useful as what all of the common technical analysis literature says. Most of the commonly written about rules around volume are complete garbage. They don't work. They don't help. So be open, if you've got some ideas about volume, be open to test them, validate whether they're true or not. And if they're true, keep them. If they're not, throw them away. Yeah. So it can be helpful. I do look at it and I do frequently try and brainstorm it to find new rules relating to volume. But most of the time I find it not that helpful. Fundamental information can also be useful as long as you've got the full time series of information. In order to backtest something, you need to know what the value of that thing was at each day in the past, in real time. Like on October 30, 1997, you needed to know what the PE ratio of that stock was. But if you wouldn't have known it at that date, you can't test with it. So it has to be data that's available in real time, or the delay so you can take that into account. Make sense? So there is some fundamental type data that can be useful and you can get in real time, like interest rates, for example. So you could incorporate an interest rate rule into your systems, and that can be helpful in some circumstances. To be completely honest and transparent, I will share with you that in most situations, simple is better. So in most situations, pure price with volume for liquidity actually works better than all of the complicated stuff. But not all situations. So, you want to be open to testing those things, but it's not essential for profitability.